Investors and traders, welcome to the channel. Today is 7th of April 2024. I hope everyone is having a great weekend. In this video, we are going to take a look at the key US stock indices. We'll take a look at these markets. We'll also take a look at the bond markets through the eyes of the bond futures. And this video is for educational purposes only, and it's not a financial advice. And what I've done is I've tried to break down the video segments, and I've created separate videos for the forex, in which we take a look at the dollar index and the key currency pairs. So I'll put a link to that. I highly recommend that you watch those, because we have to put everything together for our analysis for the markets. And I've done a separate video for gold, taking a look at the gold market from a longer perspective, and bringing it down to the daily chart. So another really nice video. I'll put a link to that towards the end of this video, and also in the description as well. And I'll try to make this video shorter, brief. A lot of things that we were watching for last week, they have happened, and some of the price targets, they can remain unchanged. So we'll just go through that really quickly. So first, I will start with the our cycle analysis, or the timing model that we had been looking at. And last week, when we were doing this video, in that we had mentioned that there was a key timing coming up that was between the 2nd of April and 4th of April. That is based on our Fibonacci time extension models, and also a low to low cycle, which is 54 trading days cycle. In this video, I will not go into the details of that. You can find a video dedicated to that, in which I explain how we arrived to that. At that time, we did not know whether there was going to be a move in the market. The markets were pretty strong, but on the 4th of April, we see a dramatic move intraday, starting intraday in the market, and within a couple of hours, the S&P 500 fell about 100 points, and the Dow Jones fell about I believe 1,000 points. And then the following day, we did not see a follow through. In fact, we saw Dow Jones rally another 500 points. So whenever we have a confluence of two or more patterns or ratios coming together, it's always something we pay really close attention to. And these dates, they were forecasted months in advance. Longer term subscribers will know that we have been in fact talking about this for quite a while. In fact, we had a date coming up around the 27th of February, and we saw the markets actually pull back. This is what we were watching for as a potential top. And then we had another key timing coming in between 2nd of April and 4th of April, with 1.618 external extension Fibonacci, and then the cycle low for the 54 trading day. And as we had a confluence of two key dates coming together in a short period, it's something which was of higher importance. So not very surprised to see the kind of a move that we saw. Now the key question is, what does that mean? Now, so this is what we'll discuss more in depth in the video. But for now, just keep in mind that these timings, they work with 2 to 3 trading days on either side. And the next week is really important. We'll have to wait and see and watch what the price action, how the price action will unfold. There's also some geopolitical events which are taking place, so you can read about those in the news outlets, and not just only the financial news outlets, but the relevant ones. And then how they might impact the financial markets, we'll have to wait and see. But from our timing model, this is the timing that we are really watching. So next Monday and Tuesday are key, in my opinion, because we still have 2 to 3 trading days on either side. Okay, so with that, I find it quite interesting that we had this timing and we get a move like this. And when last week, when we were doing the video, the markets were really strong, and I was thinking, if it is a 54 trading day low to low cycle, what kind of move to be expected. And 4th of April gave us that kind of a move in the markets. Anyway, it's not here and there. We'll just begin by taking a look at the treasury yields. So we'll start with the 2-year. This is the 2-year chart for the government bonds. This is the yield chart. So what we are looking on the y-axis is actually the yield, and you can see there's this trend line which is intact, and the market, whenever it tries to reach about 4.77%, it actually has found some resistance. So now we are getting very close to that level. However, what it is telling us is that the data which is coming out in terms of the jobs or inflation related, it is actually showing still a lot of activity which is kind of favoring higher inflation. And last week, especially last Thursday, we have seen a number of Fed officials come on and give a speech, and the message has been, maybe it might they will be evaluating whether the rate cuts will happen or not based on the incoming data. So Fed official can come and make different kind of statements, but we always take a look at what the markets are telling us. So here we can see that this kind of a move took place last Friday, and whether we are going to find resistance from this 4.77% level. If we do, that's going to be actually quite meaningful. Now let's take a look at the longer term 30-year bond futures. This is long bond futures daily chart. In the last video, we had discussed the possibility for a low for this market to come in. It appears it's moving in a channel formation, and it has already gone and challenged these lows of the 22nd of February. And last Friday was a pretty ugly candle for this, so this is a pretty big move. We had the non-farm payroll data come out. There's a chance it might actually move a little bit lower to complete this ABCD around 116.09. With the possibility of maybe testing the lower part of this channel. So we have down here the 61.8% retracement as well. So in my opinion, it looks like we might be getting closer towards a low in this market, but we'll have to wait and see and judge the price action. Let's take a look at the 10-year Treasury note. Again, as I mentioned, we have a clear ABCD price pattern, so maybe this market could move about a point and a half lower to right around the 61.8% retracement. Again, all depends upon this low being taken out, so keep that in mind. It has clearly broken this trend line here, so the chances actually increase, in my opinion, that this resistance is still active and we could reach around 108.06 level. Okay, so with that, we'll just move to SPX. So this is S&P 500 daily chart. So here we go. Here, one thing I would like to point out is, in fact, let me move to the weekly, because the weekly is longer term. So here, look, this is the cash market for S&P 500. Look at this. This S&P 500 trend line is still intact. It's a fantastic looking, really strong market, which has been moving from the left hand side of the screen to the right hand side top corner. So it's moving up. And here, if we just look at this on a weekly basis, ever since the last October of 2023, we have had one weekly close which was a negative, one weekly close which was a negative. There was no follow through. There was no follow through here. And this is when 23rd of February, when we had our timing coming in, we had 2 consecutive weeks where we had negative closes, but these are really doji candles, and there was just no follow through, so that signal got cancelled. And it's only last week that we have seen a strong towards the end of the week, in fact, sell pressure come in. Now, one thing is really important is that it's also because we are right into this region or the levels that we had been watching for. So here, what is really key is to observe if there is going to be a follow through or not, because there was no follow through here, no follow through here, and then again after a couple of weeks, no follow through here. So if next week is going to be a no follow through, then shorter term we are still looking for the 1.61 expansion to be around 5394 or even 5400 level for the S&P 500 cash. This is shorter term, and beyond that we also have other levels as well, such as 1.61 expansion around 5650 for the cash market, but we'll take one thing at a time. So this is what we'll be watching for. The really key thing is that there is no follow through, or we get a couple of weeks of maybe sell pressure coming into the market, but anything beyond that, we haven't seen that here in this market. So that would indicate that perhaps things are changing a little bit. So really watching that very carefully. And this is for the S&P 500 cash market. So with that, let's take a look at the S&P 500 futures. This is the E-mini futures market. Again, we have this ABCD completing right here. We have some higher levels as well. I've not drawn the shorter term targets, but you know, from the cash market, we already know there is a possibility of really shorter term targets. Now the key thing is that for this one, I'm going to go down to the daily chart to show you something. Again here, in fact, on this chart, we have only one down week, another down week, another down week. The futures are in fact, you know, on the cash market, we saw two negative closes inside bar weekly formation, but we don't even see that in the futures. So the futures are actually, you know, pretty strong. So moving down to the daily chart here, this is something I really want to show you, which is going to give us a lot of clues, in fact. So whenever there has been a correction in this market since the beginning of the year, it was for about this much magnitude. So every time we have had a correction, it's been of this much magnitude. So you just take this, copy this, put it around here, and then you put it around here. So what the down move, that really surprising down move that we saw last Friday, it took us right into this level. So it's actually, from a market symmetry perspective, that move is completed. And probably this is the reason that we haven't seen a follow through, because, and if that's the case and there is no follow through for the next 2 consecutive days, then that might have been a pretty good low. And we already know that we have our timing model come in as well. So when price meets time, the pattern is complete, and that could indicate perhaps a really strong move, as long as this low is not taken out to the downside, where the market could in fact, you know, move higher rather quickly and could go much higher. So it could be a fantastic move to the upside. But the key thing is that this low of last Thursday, which was 51.9250, is not taken out to the downside, and this could indicate it was a pretty good bottom. If it is taken to the downside, then this means that this bearish symmetry is broken, and we might in fact be starting a correction which can go on for quite some time. So this symmetry is really key, and we should be really paying very close attention to this. In addition to this, let's try to see what kind of retracement that we got. So if I just draw a retracement from the lows of 5th of January 2024, so you look at this is a really strong trend, right? Normally we don't look at 23.6% Fibonacci retracement, but because this trend is so strong, I did try to put it in to see you know, if we get any confluence. And do we get that? Yes, we do. So from this low beginning of the year, we get about 23.6% retracement, and then the next key low, if we take this one, because this is where the symmetry comes in as well, then it was also 38.2% retracement as well, or very close to that, within maybe 5 or 10 points. So this is an additional thing which is telling us that that level is really, so the close of last Thursday of low of 51.9250 is really important, and as long as held, in my opinion, we should get these highs getting tested one more time, and then even beyond that, because we do have some shorter term targets and then higher targets, as well as we have seen on the cash chart and also on the S&P 500 E-mini futures chart. So keep that in mind. Now let's take a look at the NQ. This is NASDAQ 100 futures chart, and here let's take a look at the corrections which have taken place before. So here we go, and okay, so NASDAQ has had a little bit of more corrections beginning of the year. This one was the biggest one that we have seen in this leg higher since the beginning of this year. So what it means is that, you know, let me actually quickly do this one as well. I think this correction so far has been equal to this one, and yes, it's pretty close to this one. So what it means is that pretty much similar to S&P 500 and last Thursday's close. As long as it's not taken out to the downside, we could see further strength coming in this market as well. However, one thing I would like to point out for this market in terms of futures, comparing to indices, in my opinion, the tech is getting a little bit weaker, and it could be because of rotation taking place. So bigger funds may be moving out of the high growth tech stocks because of the fear of maybe interest rates higher for longer coming in, or just rotating out into energy stocks, which have been doing quite well. And even some of the gold stocks miners have started to move as well. I've done a video on that, so do check that out. Because the reason for us is that from technically the 1.272, the market has been there for 1, 2, 3, 4, 5, so a little over 1 month. That's quite a lot. So as long as the market, if it is able to break out of this high of 18691 1/4, it may go higher to 19,380 as well as 19,690, and of course we have a higher target of 1.61 and above that, which is 20,770. But a lot depends upon if the market is able to take these highs out to the upside. Momentum is really strong. In my opinion, what's happening is some rotation going on, where some big funds might actually be moving out of some of these tech stocks, which have extended a lot, really been a strong trend, and moving out into maybe some value plays or dividend plays, or moving into other sectors such as energy. So keep an eye on this one, and of course what we had a look at on the S&P 500 futures chart. Those levels are really key. And now let's take a look at the Dow Jones. So this is the weekly chart of Dow Jones, and the Dow Jones one is actually pretty interesting because we have this upper channel formation here. The market actually broke out of it, but the last week has been pretty negative. Again, same thing applies. If there is no follow through, we do have higher levels as well. So it already breached the 40,000 level, I think, also on the cash as well. So yeah, the similar to what S&P 500, if those levels are held, we could have a fantastic move to the upside. That's still possible. However, if there is a follow through, then just look on this chart. There was only one time when we had two consecutive these doji candles. I'm not even sure if they were bearish candles or not. So this will be something a little bit different in this entire really strong move from October of 2023. So if there is a follow through to the downside, we need to pay close attention to, because things might be changing a little bit. And finally, last but not least, the Russell 2000. Here we go. The Russell 2000 was doing actually quite well. It was breaking out, but again, this resistance at 61.8% retracement, which is from this high to around here. This is proving to be a little bit strong resistance. But there's still a possibility, if there is no follow through on the weekly basis, it might actually go and complete the ABCD around 2373, challenging these highs. So again, we are entering a really key and critical week next week in terms of the price action. We have to wait and see, especially in the next two trading days, Monday and Tuesday, what the price action will bring for us. If there is going to be a follow through to the move which we saw to the downside last Thursday on the daily charts, and at the end of the week, whether the week is going to close positive or negative. So in fact, whether there was a follow through the downside on the weekly charts, again, we'll have to wait and see. Really key levels we are trading at. We have our timing coming in S&P 500, in the Dow Jones, and I believe Dow Jones is actually leading in terms of timing the other indices as well. So we have our timing. We have a low hit. Let me actually go back to the S&P 500 futures chart, going back to here we go. So I just showed you the concept of symmetry here. So as long as this 38.2% retracement is held, and there is just no follow through the downside, in my opinion, that things could be could accelerate quite quickly to the upside. So this is what we are watching. in the stock indices, the major markets that we cover. So thank you very much for watching the video. Good luck, good trading, and I will speak to you guys soon.